Broadcast right now. So what about that S&P, right? Big rally day yesterday. We had up days Monday and Friday. Those are called shoulder days, or the days right before and after weekends or holiday weekends. Shoulder days. Now that's a special case type of a scenario. And how to profit, well, I can't guarantee profits, but how I like to trade it is something that we cover in the live trading room, right? But one thing that you should notice is what jumps out in our S&P. The first and most notable thing is we lost that all-important 200 simple moving average line on Friday. Now we did have an up dead cat bounce day on Monday and another still technically dead cat bounce day yesterday, Friday. But the broad market's still holding under the 200 SMA, so we're still in bear territory. And for proof of that, you can obviously take a look at our SIBO volatility index, the VIX. You can see the VIX is way up there at 28, despite the fact that it did a drop and the VIX pulled back. It's still way up, anywhere over those three moving average lines, in this case north of 22, is still in bear territory. We do not have a recovery market. Remember I said this. We will not have a bullish recovery market that's worth doing anything other than speculative bounce trades in until the VIX gets back under 22. As long as the VIX stays in the pocket up here, screaming up at new highs, right? Well, it ran to 39 back last week, right, on Friday. Even though we're down here at 27.5, the VIX is still in very bearish territory. So for that reason, this is a stupid time to buy stocks. As tempting as it may be, you may hear people on Talking Head TV saying, it's time to buy quality oversold stocks because the market's going to rally. I don't think so. I'm curious, how many of you think the market's due for a major bounce back up to, say, 4,600, 4,700? Well, what's your vote for next week? Do you think? I think we're going to get a small dead cat bounce and then more selling pressure toward the middle and later part of next week. But how many of you think? Tell me what you think. Are we going to get a bounce, move up, or ultimately say by next Friday? Let me rephrase that. For our next broadcast, by this time next Friday, do you think the market will be up or down from here? Again, we have no idea, but and go ahead and vote if you want. I think we're likely to see some of both. We're likely to see a bounce. I'm going to call that a bull trap. The market's still very much in distress. The fact that we're under the 200, bounce and then lower, bounce and down, no idea, move down, a bounce. Hey, thanks, Stephen, on the AMTH. And yeah, LabVIEW we were covering LabVIEW yesterday in the live room. Two of my traders, I think both Wendy and Mick mentioned LabVIEW. But yeah, I agree. We should say technically no idea, right? We don't have a crystal ball. We can't predict. We just react. But with that chart pattern, the technicals come to the rescue. The market did hammer out a base, so we got a hammer right here with the support line near the 42.20 or so. And I hope you guys are learning candlesticks from my colleague Steve Nissen, right, at candlecharts.com. He's the right guy to learn from. Anyway, so what I learned is I see a hammer, so I don't want to aggressively short this market till we get under 4,200. That would be the professional trading advice. If you were my institutional clients, that's what I would say is start nibbling away at size on, say, buying index puts or inverses or what have you. But we don't want to aggressively short unless, and for new traders, shouldn't look at shorting or going into inverses unless we get under the hammer low. That's very important. There's two key technical signals on that chart. One is that bullish green hammer with the tail down in the 42.20. So that says, thou shalt not sell me until we get under the low. The other is the fact that it happened right under the 200 SMA, right? I was trying to puzzle this out, trying to figure out the difference between volatility and how to trade it. And for me, it's all about decision support and what kind of size I trade, right? So for example, if we get back over 44.50, that'll prove a bear thesis incorrect and may want to start slowly nibbling into swing trading positions. If we do get over and hold over that 44.50, 200 SMA. But the mere fact that we broke it, it's like snap, the market lost the 200 SMA. It's like watch out below. And everything should be treated with a great degree of suspicion and caution next week for longs. I'm not going to swing trade anything in this market other than inverse instruments at lows. We have a lot of quality oversolds that look tempting for a bounce, but the bounces may not last for very long. So what you want to do is put yourself in the right frame of mind to be focused on the right charts and how to trade them. A big turnout. So again, with the VIX way the heck up here over the 22, up in 30-ish territory, around 27.5 in the close, 27.66. So just over 27.5. That's still wildly bearish. And every Wall Street trader, every professional trader, we all know that. So remember, we still have a very bearish bias despite one off day that bounced up yesterday. It's still in very much bearish territory. Now we have a shooting star here with a really big tail. So we'll see which way it goes. If we take a look at some stock charts, oil has been kind of really the strong standout sector. Here's Halliburton. This is a good one, right? HAL has been up. We take a look at the oil. One thing you want to look at as an active trader is first, what I like to do is a top-down approach. You look at the broad markets, then you look at oil and gold, and crypto maybe, and then you look at individual sectors or industry groups, where they're looking at growth and high multiple tech, which is probably to be avoided here, or your cyclicals or defensive plays like utilities and energy. You can see HAL is up. Occidental Petroleum also a nice up chart. That's Oxy, right? UCO ETF up nicely as well. So one thing that stands out to us all is that oil's been on the run. Now it may fade next week, but as long as the trend is there, we hold steady. Someone mentioned land. That was a good run, but it pulled back. Ford Motor Company has been interesting. It did break the 20 as anticipated, ran all up to 25, rolled over and came back down here. I will trade Ford over 21, so I'm going to get back into Ford. I think I gotten stopped out trying to buy like 20.5, 21, and got out on a pullback, so no big deal. But I will get into Ford and build a position over 21 because I think it's a good price. It may drop down into the teens further next week if the market sell pressure continues. But Ford is a good candidate north of that red line, above the red line over the 21. I'm going to start buying some Ford Motor Company stock next week if it goes up. I don't want to chase oil because I think it's a bit extended, so I don't want to pay up for oil stocks. I'll day trade them, of course, but for swing trades, not so much. Here's one that one of you folks had mentioned last week, PBR. Papa Bravo Romeo up here near the 14, a pullback, maybe worth a peek. UAN, another expensive but really nice run, right? This thing UAN. Uniform Alpha November up near the 100. ECBG, another perfect chart. And this is thanks to you folks. This is one that you folks had mentioned. Well, a lot of tickers. Okay, I will take a look at those in just a minute. KOLD, our inverse natural gas. It did do the bounce, split adjusted back down near 11, 12, 13, and it ran up to much higher. Almost doubled, I think, right? Might have doubled. It's pulled back now. I am interested in, I will be trading KOLD on any bounce and KOLD as well. Now let's switch gears and take a quick look at our intraday charts. This was a good pick from Trader Mick, a really smart one. Robinhood to the rescue. Robinhood, this is a gap fill, right? Just like gaps up often go down, big gaps down often go right back up, right? And we called this long for members at just over 11 yesterday, ran all the way to 1280. So Robinhood to the rescue. That's an arrow. Anyway. PRVB, a nice cheapie on the uptick. KSCP did a really spectacular run. We called it long for members. I think it was 8. Do you guys remember? I think it was 8:20 or 8:30. Let's. I don't have my alerts table handy here. But we nabbed it for our members just over the 8. And these are the kind of charts we like to cover in my live room. Now, just a reminder, I do have the Trading the Open live room. I usually don't extend deadlines, but since we had the Success Summit with Tom Sosnoff, Larry McMillan, Steve Nissen, Harry Boxer, Barry Burns, and Jeff Gibby and myself, the summit, didn't have time to send out enough email to let people know about the live room. So I do have a live trading room special for 6 months, just $4.97, and that's to celebrate my birthday from last week. You can get in at trademastery.com/bday. We meet 5 days a week from 8:30 till 11, plus the afternoon from 3:30 to 4. So a lot of coverage compared to, I used to just run the room Tuesday, Wednesday, Thursdays. Now I run it 5 days a week, and we cover the afternoons, and that's all included, and no extras, nothing else to buy. You don't have to buy scanners or courses or anything else. So you get the live room, just $4.97. The final deadline is tomorrow, so if you want to join me for 6 months, it's just $4.97. So less than the price of a Starbucks coffee a day, like $86 a month or something. It's a really good deal. We got lots of new members on board, and if you're one of them, you've seen how well the alerts have worked, right? One thing that sets my room apart from every other one is I give alerts ahead of time. Like it's starting to go up where specifically, let's say something's at $7.80 a share. Also, I post in the alerts table something like, we go long if it gets over, say, $8.10. And then where do we trail a stop? And where's our exit target? I give you all of that on a silver platter. So I give specific alerts ahead of time, unlike others who just talk about charts. So trademastery.com/bday is your ticker. Let me give you that link here. And then we'll get back to our charts here. There it is. Okay, so that's in the chat. If you want to open the chat text box, that's the link, trademastery.com/BDAY. And it's a good bargain, right? It's the best deal I'll offer on the run. The price will never go under this for the live room. It's under $100 a month, which is a really good deal for me to work with me personally. And you can bring questions, and we're friendly and professional and all that good stuff, and lots of folks. So no BS, just good, honest alerts. Anyway, that was a good chart for members yesterday. KSCP. This one, TKLF. My long trigger on this was 305, back when it was right under the $3. And this illustrates a couple things. Now, I don't generally like cheap charts like this. I like things mostly in the $15 to $30 share range. That's, like you can see, we go as high as 40, 50, and as cheap as this. But usually we like charts that have multi-point range potential. Like this one, OSTK, I think that's Overstock or something. Anyway, it ran 39 to 43. Now this illustrates a concept you may have seen in one of my stocks and commodities articles where we look at whole number breakouts. So 39 was whole number support. Or long, you look for long and they say right over 40, and you look to sell right under the 41. Now that illustrates something. As a day trader, you should be fine if you buy 40.20 and sell 40.8 for a 60, 70 cent run. You're not going to get the exact bottom or the exact top. If you can get at least 50 to 70 cents out of a run, I think that's good for a day trade. So we like to, of course, keep our risk much tighter. That one we called for the bounce. I think it was right over the 26 for our members. Now, if we take a look at some of the up ETF charts, here's a good one, our biotech long LabVIEW. And one thing that I like to do is give alerts for paired ETFs. So, for example, there's LabVIEW versus LabD. And when one goes up, the other goes down, guaranteed, because they're opposite ETFs. One's a bear ETF, the other's a bullish ETF. Right? Or, for example, SPXU. Come on, SPXU. SPXU. I lost money yesterday trying to play the bounces in this. It never did come back to life. I thought surely enough it'd bounce here. But it didn't. But good old SOXL did really good for members. I called it long for them in the afternoon session right up over the 40-cent mark. Now this is a good example of a close-up chart that I use in the room. I have it zoom in on the 1-minute chart, and this is a really nice pattern. We called it long for members at, I think it was 30, somewhere in the low 37s. Anyway, it ran up all the way up to 38.30 or so. Now notice a stair-step pattern, and by that I mean every time it goes up and pulls back, the price action comes up again. So when you're looking for these kind of charts, whether it's in the close or trading the open, you want to look for charts that have continuous again, as day traders, these are kind of charts we love because there's very little in the way of pullbacks or reversals or consolidations, and very strong uptrend where it would have been very easy to make a lot of money trading this. If you had taken my alerts yesterday, I know for sure we had like 37.40 and 37.70 or 80, something like that. And we ran all up to 38, as high as 38.30 up there into the close. So when you configure your charts as an active trader, there's two different, for day traders, you want two different charts. One is a close-up, like a close-up magnifying glass on a 1 minute chart like this. And the other is the big picture 30,000 foot view, which is your 2-day chart that goes a little something like that. Now this is our S&P. Now, what goes up comes down, right? In this market, one quick note is you want to buy support, sell resistance. This is not a breakout traders market. This is a up and down pivot traders market, right? We've got things go up and they go down. So for that reason, I bought a little bit of inverses, as I often do, Friday after the bell, just like 400 shares worth. So I don't know, just $5,000-6,000 worth. So relatively small size because the market often pivots up and down. The market often, right now at least, we're seeing a lot of false breakouts and reversals. So one thing you want to be especially paying attention to is, when something looks weak and starts to bounce, it's usually a good buy. If it runs up in your favor, tighten up a trailing stop because it'll often come right back down again. So this is a trader's up and down sawtooth, what I call a sawtooth or a sine wave type of market, right? So for example, I bought a little bit of this right after the market closed on Friday. I also bought a little bit of the VIX, ETN VIX. I also bought, sorry, these charts I need to complete them here. Anyway, well, you may have heard the phrase buy the dip, sell the rip, and that's very much the case in this market. You buy support or pivot off support and sell resistance. So when you see, we see these patterns daily in the live trading room. It's what I call bear cup reversals, and that's where maybe you have a gap up, pre-market, and at 9:30 it's come right, or 9:40 it's come right back down to support, and then at 9:45 it starts to bounce. Those are often good pivot plays. So understanding the ins and outs of those is one thing I like to share as well. Now, range is really important. One of the things what was the chart? Yeah, this one. When you have a chart with multiple points of range, that's often the best type of chart because profit potential is much better than trading the under $10 cheap low float, like a $3 random stock that's got like a 70-cent range. You'd have to trade a lot of size and be right a high percentage of the time, which is much more challenging, at least in my experience, than trading instruments like this. We've got multiple points. So you buy a breakout right above consolidation. I never buy a 9, so I would not buy a 39.90, but right above the whole number there, it'd say 40.20. And you sell the 41. Then buy over the 41.20. Then sell right under the 42. So trading within $1 ranges, one thing that you'll learn with me in the live room. And one thing too that you want to make sure that you are on the lookout for is authenticity. Here's an example screen cap from my Fidelity account from a week or two ago. This is for the tax year 2021. You can see I did over $23 million worth of order flow last year. That's a phenomenal amount. That's the most I've ever done in my life. I traded $23.2 million, more than that, but that's the disallowed loss number. But I did over $23 million worth of order flow. So that's a lot of experience. That's tens of thousands of trades I did in a single year, thousands of trades at least in a single year. So you can learn from me. You will not see this from virtually any other educator. Who running a live room shows their tax return proof? And I'll show my 1099 from Fidelity when I get it, and I think second week in February. I'll post that up here as well. But learning to trade from people that are actual real traders versus people that just talk about it It can be all the difference in the world because authenticity counts, in my humble opinion. I'm curious, how many of you think it's good to demand that people who show traders how to trade actually show things like their 1099s to show? This one's from a long time ago. I haven't really saved any lately, or at least to post. I will post the 2021 one from Fidelity in just a minute, or in a couple of weeks. But how many of you think that requiring educators, I think it's a big thing, because it's otherwise you got blind leading the blind. You got people that aren't real traders that just talk. They talk the talk, but they don't walk the walk. So I really believe that the more proof elements you can demand to see, like one reviewer, Emmett, said, I was one of only 5 educators he could find in the whole trading industry that he could show proof that they actually traded and had at least a profitable year. I think authenticity is really important, because the trading education industry is full of hucksters and scammers and people that aren't even real money traders. They're marketers, sure, and they do a lot of webinars, but where's their tax return proof that they're actually really doing what they're teaching? So, oh, thanks, Ian, saying I'm a straight shooter. And 10-4 on that. Thanks, Jim. Hey, Wendy, thanks. Yeah, it's important to focus on this stuff. So anyway, we're going to wrap up in just a couple minutes. Point is, we got the live room special is at trademastery.com/bday, if I can get back there. Okay, let's take a look at some new charts. The offer expires tomorrow, and well, I did extend it this once because I did the Success Summit and didn't have a chance to get out emails for the promo, so I extended it by a week. And normally I never extend deadlines, but in this case I did because it's such a good deal and so many new members. So thanks to all of you who've been joining. If you're not yet a member of my live room, you can join for 6 months for just $4.97. No ups, no extras, no add-ons, no upsells, no BS, nothing else to buy. And we meet in Zoom 5 days a week. All right, let's get back to charts here. Okay, what else are people asking? Let's see, swing trading charts. Let me get this pulled up for you. OSTK. Another quick tip, if you're looking for pivots, look for things that came down from at least a double, preferably a triple or quadruple or something, but at least a double the current price. So OSTK, actually that's a really good bounce pattern over 45. So thanks to whoever mentioned that one. OSTK, one of my live room members, I think it was yesterday. Please repost your tickers if you've not done so. Let's see. Hey, Mark, it's at trademastery.com/bday. Okay, thanks. Yeah, I'm sorry. I have so many scrolling notes here, and I don't have the energy to go, or don't want to go back and scroll back up. So please repost your tickers, and we will take a quick look. We're going to wrap up here momentarily. Someone asking about TTD. It doesn't have enough range for the price for a pivot. If it had gone from 100 down to 30 and then bounced, maybe. So I like the OSTK better. Let's see, TM. It's not trading recommendations or advice, just my personal take. TM, too thinly traded, not enough volume. Let's see, FPI. So now here's the part of the morning presentation where you post in swing trading tickers and I'll eyeball the chart. Not enough range or trend, that's an awful chart. That's a good chart, Halliburton, a good example, right? ISD, let's see, PLTR. Yeah, that may be, yeah, that's a good one. That's a good one for bounce. I like that one because it's got a 2-to-1 range. And it's got a hammer. Hammer time. Da-da-ba-da. Back on Monday, right? So hammering out a base at the 12 would be along north of 14. Yeah, that one I like. Thanks. If you're in the room, remind me, please. And INMD, let's see. INMD. Bum, 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 bum. Yeah, that's a good one, too. I like that one, too. Those are both really good candidates for pivots. Because a couple of things. Technical pattern analysis. One thing you want is clean, like a piece of string that's been tight. You don't want choppy charts. You want a nice clean chart with a big trading range and a lot of volume and has come down at least half. For pivot trades in this market, you've got so many that have come down so far. It makes for a good setup. I think DraftKings is a good pick. I'm going to trade that one. I think Virgin Galactic is a good one, SPCE. For on the bottom fisher, that one's really good for a pivot, right? Even if it's just a short squeeze play, you can probably get a couple of dollars out of it. So those are my two. I like DraftKings, SPCE. Let's see what else. Walmart and Las Vegas Sands. Walmart. That gets my award for the worst chart of the day. That's a horrible chart. But thanks anyway. What's to like about that chart? Choppy as heck. Percentage-wise, you're paying a fortune for the bounce, the privilege of a bounce. The leverage is terrible on this chart. That chart sucks. The company's great, but the stock chart not so much. Let's see, the Sands. No, that's a pretty terrible chart too. For gaming, I like DraftKings. That's a good clean. Do you notice how clean and tight, like a piece of string, tight, or a handrail or something that's long, and it's got a really nice start of a pivot. Not enough green in the bounce yet, but if it does get over 22, 24, that one may be worth a shot. Let's see, Bill saying Qs. Well, if we look at our technology, our NASDAQ ETF, the Qs, it is a potential bounce, but it's also a potential sell-off. The main thing is, do buyers come in at least over that 355, or do they get under the 335? So I just mark out the obvious support and resistance from the inside the consolidation range. So we'd want to short this guy under the 335. We would expect a false breakdown and then a bounce and then a resumption of the trend, by the way. And same thing on a bounce to the upside. It may go over 355, go up a couple of dollars, pull back to head fake everyone, and then run up. So on breakouts outside of consolidations in this market, I've seen this so many times. We have false breakouts and then the big run. Just like the fake out, I think it was Monday, right, where the Tuesday, maybe it was Friday. In some recent day, we had a head fake, the S&P was up, and I told my traders in the live room, this is a bull trap, the market's likely to sell off, and it sold off really sharp. I think it was Friday, sold off sharply. So intraday and on swing trades, you've got really big ranges to work with. And you should be anticipating false breakouts. So anyway, I think that's going to be, yeah, TZA has been good. Thanks. I'm going to wrap up here in just a second. We got some last minute tickers here. AXP. That's a terrible chart. That's a horrible chart, right? No trend, no range. Let's see, how about CALX? If you want to make money as a trader, you've got to trade things with big point range and strong directional volatility, not choppy charts. That one's okay for a bounce. I see where you like it, and yeah, maybe a play north of 48 and again over that 54 up there. But from a percentage standpoint, there's more range in some of the others. But that one actually might be okay. I'd give that maybe a C+. But yeah, that one's okay. CLX, how about GDYN? That's just okay too. See, for example, if you look at those two compared to something like this, or something like this, I think my number one pick for a bounce goes to this chart. My pick, DraftKings, right? And a lot of competitive space here, but it's got such a big range. The stock formerly known as 60 a share, now down at 20 a share. That's big. So when you're looking for pivots, usually the best idea is don't. But if you do, make sure the range is exceptionally extended, not just a little bit, right? So charts like these two have just a little bit of extension visually on the chart pattern. So they're okay, but I think there's others. Yeah, and I prefer stocks going up, but pivots are good too. Let's see, RBLX. I play both pivots and breakouts daily. This is a trader's market. Let's see, RBLX. That one's a little better. That's okay. I prefer to see it get down to like 30 a share and then bounce, but just because it popped up to 140, the average price on this average is around $80